Hey guys, good afternoon. This is Simon with TRADENPERFORM Coaching. Just want to do a quick trade review for today's trade. It was a really good day. We had excellent trades in both CL, ES. Everything we had was to the short side today, and wanted to address the afternoon as well. But first, let's jump into what worked. Okay, and I want to set up ES first. So to look at ES, let's draw the chart up to begin with. And where we start our trading in the room is looking at primary support and resistance areas, right? And this morning, what you will see up here on a 5-minute chart, this is the white zone up here. We could not reach it. As a matter of fact, we came in and we were already in a trend day down to start the day, right? If you look at this as an AB move here, what we ended up with was an AB equals CD at the end of the day, and that's why you got that extension, right? If you look at it like this, you kind of came in here, and if this is your AB move, this gave you your CD. We didn't quite reach the 100% extension, but I got a feeling we'll end up doing that in the evening. And this made a lot of sense, right? Why is that? So let's go back and look at a couple of things before we get started. Number one, when we look at the profile, right? I'm going to have to grab it really quickly. All your trading should start off from the profile, right? So number one, let's get over to ES. In order to have a short, right, the first thing that you want to do is both a TPO and a volume profile, right? And so this is not the source of all my trading decisions. This is the beginning of my understanding of what the market's going to do through the course of the day, right? So the first thing that I'm looking at for the day, we had 2 days of balance. The market, if you pull it in, you'll see we've gotten pretty bone crushed in just a couple of days, right? We rolled from 30.32 all the way down to 28.18. When you look at where we were at the peak, look at where we were at the bottom, basically came in to the 50-60 retrace. From that 50-60 retrace, we had 2 days of consolidation. That was Thursday and Friday. Friday was an inside day to Thursday, meaning we did not explore price outside of Thursday's high and low, right? So that became, 2 levels became key. Number one, in order to move lower, you had to be able to hold underneath prior day's value area low. That was 29.10. We never even made it to test today. They tried to test early this morning. Secondly, you had to get below and hold below prior day's low. And then the funny thing about that is, with regards to the downside move, really, if you were going to kind of peg where's the support on this thing to the downside, it's at 28.55 to 28.53. It's really amazing that we didn't get tagged harder, but I guess it was Monday and there wasn't a lot of energy built up in the trade. So, coming into ES, we already knew we were below value area low. Let's shift the conversation for a moment, right? So this begins where we're thinking about the market. We go from there. So here's the 5-minute chart, and if you'll look, you'll see from about 2:30 a.m. all the way down to about 5 a.m., we had an original impulse move down, right? So usually when you get an impulse move, whether it's long or short, you're going to draw a 50-60, and the inability to get behind that 62 retrace lets you know that buyers are in control. The second thing that I pointed out in the market preview was that you would expect shorts to get run out. Why? All the inventory is short overnight, and this all comes from Mind Over Markets, Dalton's work, and it's a great place to start learning about how to trade the market. The stuff I do is pretty advanced, right? It's not basic 1, 2, 3, this is support, this is resistance. We're looking for more complex patterns, right? So the first thing you'll notice in the morning is, if you've been trading for any period of time, is that usually when we get down, we attract a lot of buyers into the market. But that didn't happen. We weren't able to make it over the last swing in any of these situations. This is the swing from before the open, the swing from overnight in the European session, and then finally that was the last attempt to get above the swing there to the right during the US session. And that started our roll to the downside. So 3 key areas that you can look at from the higher time frame, right? Secondly, when you look at what happened at 10 o'clock, they pushed us down to 2088 and they tried to trap back in. The reason why it looked like this is because usually on a Monday, you'll end up with a balanced day. And that's when you'll hear people say on a balanced day, the best place to trade is on the edges. And if you look how that worked out, right, this was the swing high before the open. We traded above that, failed to hold above, fell back into the range, traveled to the other end of the range, right? Then we fell out to the other edge, right? Talk about trading the edges. And you'd end up trying to look for a long, if you could, down here. Unfortunately, my support level was down here at 84 to 79. It just didn't reach it the first time. And I caught the short to the downside, and I did not look long. I did not want to overtrade, and I actually made quite a bit of money just on the initial roll to the downside. We were originally short at 29.06 this morning, and I'll cover out how we did that. So now you have two pieces of evidence. Number one, we know that 29.10 is value area low. We weren't able to get to value area low. We know 28.98 was prior day's low from Friday, right? And we know that 28.92 was the low from Thursday, and that Friday was an inside day to Thursday. Therefore, that low is pretty darn important, right? So, how do we set up the short over here? How do we finally figure this out? So I'm going to go into it, and guys that, I do this primarily for the room. Guys that I coach, this is a grade A setup, right? That just simply doesn't get any better. So I'm on a 1.5 range bar here, right? And if you'll roll back to the morning, there's a couple of things that we're looking for. Besides the fact that we know that we're looking for balance, we're trying to trade the edges, right? So now we're integrating the momentum waves to see where those edges are in those momentum waves, right? So the first thing that you'll notice is, again, this goes back to our 8 o'clock swing, and these are much smaller bars, right? If you're looking, this is much smaller than a 5-minute bar. You really have to pull it in and know that from the overnight session, this was roughly, when you look at it from this perspective, it changes things up. We're looking at information and data differently because this is showing me where the energy, I have algorithms running on this chart, which is showing me where the energy is being expanded, right? So number one, I know in order to break out that overnight, I have to get back above 29.28, but really, this ends up being my, here, let's erase all the lines out of this so I can draw it. This right here ends up being my European swing high, right? Right there at approximately 3 in the morning. We were already rolling down. I'll take it back. Let me see what time it was exactly here because I'm off just a hair. There we go. I was off. That was our high. Wow, what did I do? I jumped back to Friday. Let me correct that. Fix that. There we go. And now we can see the times clearly. I don't have the recording device covering it up. Okay, so this ended up being the swing high from 8 o'clock. I stand corrected, right? So when we're looking at this down here, there's a couple things that we're looking for. A, right, there's only two places I can poke my head up and get a trap, right? That's either going to be up here at 29.32, all the way over at London Open, or above where the consolidation was, right? Now, normally, what traders would look for is they go, hey, we've gotten above the consolidation. I'm looking for the breakout. And I have no problem with that, unless my algo sets up and shows me some very interesting information, right? So, I am always looking for the algo to trip me into some type of head and shoulder formation. So, in order to get that, this is the possibility. That is the first possibility of me having a head and shoulder during the U.S. session, right? They, obviously, if you look to the left here, they attempted to make this your left shoulder right here earlier in the morning. And then you needed to poke your head above it. So that would have been this right here. And then they tried to roll down. However, once you get below that, it's imperative, if you want a high odds setup, that you not ever get above your left shoulder, right? Additionally, if you look at the way the waves were pushing, we never really got a big push on top. And I like to see a big push. Why? That shows exhaustion. They're either going to break it out on that push or it's going to fail, right? So now when I push it out here, the first thing that I'm noticing is as we push to that high, right, see how I know that we get bigger pushes over here to the left, so I'm going to hide this for a moment because this will show you what we were looking at in real time, right? So the first thing that I'm noting in the room is I'm like, hey, if I can get above this 29.07 and fail, right, I have a chance for a decent rotation lower. So if you look at how the momentum was setting up, and I'm only looking at the upwards because I'm wanting to trap traders, right? So here's my first push. That's great. Here's my next push. That's great. None of this gets me up above this swing over here to the left, which is what I want. Another push. Nothing yet. So the first thing you're going to notice is, hey, it's 9 o'clock. They're putting an awful lot of delta in, and we're not going anywhere. But they never get underneath it either, right? So we're just kind of chugging along. Finally, when we get here, you will see that we get this big delta push, right? So if you look at this push, what I'm looking at on momentum is I'm kind of going, hey, this had a ton of push, this had a ton of push, but almost no result, right? We still can't make it convincingly over this swing over here, which is what everyone needs to break out. What this is telling you is how much pressure they're putting on the buy side of all contracts that are traded at the market, how much pressure they're putting on the buy side, and it's going absolutely nowhere. Now, finally, you'll see that they limp it across with one positive bar above, and then we get, this is an algorithm, speed bar, fractal, shift down, right? That tells me on a really big delta wave, you should not get that. There's divergence there as well if you look at MACD or stochastic, right? You should not get that. When we close back in right here, that is a short entry, 29.06. That correlates with a time of, I'm going to pull up the Slack channel for the room here real quick. And what you will see from this morning, oh, there we go. Short 29.06 ES against 29.09, 9:30 a.m. Why is that important? Number one, we have controlled risk. We know we don't want it. So if we push out on this, right? If I push out on this trade and widen this out so everyone can see it really easily. That bright red bar tells me that there was a lot of bids being hit when we push down. They pretty much swept the bids, right? Secondly, the fractal tells me they have a potential change in momentum. Third, right, I've gotten above my swing to the left. Finally, I have my shift down right here. See that little arrow? Algorithm's telling me, hey, that's an expression of energy being pushed out. And I know when I get this combination of getting above a wave. Now, I don't know that that trade will work, right? All trades, no matter how high your win rate, you always have a 50-50 chance of that trade winning. What I do know is that has a high win rate over time. It's somewhere between 70 and 80% over time, which means out of every 100 trades, 20 will lose, 80 tend to win. By how much? Varies significantly by how wide the market is, right? So I get in the trade, and then the next thing I'm going to do is go, well, hey, where do I think, now that we're in, where do I think the trade can go? And what you'll see, if I can find it again, is, well, I can't find it again. I had it earlier, and apparently when I moved it over the screen, I lost it. It was 9:30 in the morning. Oh, there it is. And I put, let's see, I was already short CL there. Go through, go through, go through. Okay, and so I believe 2900 was my first scale here. Why did I choose 2900? I had some good reasons for it. Number one, off the bottom, this is my biggest push up right here, right? Followed by my biggest push down. This area right here, that big push down, what someone tried to do, what that tells me is someone tried to come in at the low of the session and get a break to the downside and failed. If I look at that wave, I know two things. Once I get above that, so I'm going to draw a line above it, which is roughly here, I know that whoever tried to sell there is pretty much screwed and they're going to get short squeezed. That short squeeze is what set up my trade to grab the short to the upside, right? Someone overcommitted, they had to cover, other people came in because they figured that was going to be the low, and you get a nice rotation up. I did not take that long, mostly because I did not get set up off my algorithm. It did not trigger me into the trade, and that's totally fine. I'm not trying to capture every trade. I'm trying to capture the best trades, right? So then, on the other hand, as we push up, the algo does trigger me in to a short right here, 2906, right? I take that 2906, my first scale is 2900. Why? It's roughly, number one, it's 6 points. My risk was 3 points. I already have a 2-to-1 RR in covering that trade. Next, as I'm going through, I know that when I get right here to 28.98, I expect responsive buyers to come in. Why? Because this guy is stuck. And if you will look, when we hit roughly 28.98, that is where they came in, and that is where I closed the position, was 28.98. Why? A, it was 8 points. It was a great full-size position for me. I've had a good day already. I don't have to do anything else, right? So that's how I set up the trade. And what was interesting here is it really rolled down pretty hard afterwards. Doesn't bother me at all. We actually had, I just didn't figure we were going to roll all the way down to 28.88, or obviously I would have ridden it. And that was an option for the members in the room, right? I simply had enough at that point. That's an excellent extension. I got a 2-to-1 RR. And I'm just going to note in my journal, so this is what I'm going to say, right? In my journal, right, I actually got triggered with a speed bar shift up, even though it wasn't an area I was looking to get long in. We were getting the response back from the biggest push up to that point, right? We were getting our response from the biggest push to the upside. Here's where I failed, or I could have done better. This became the biggest push to the downside right here. And I should have figured that unless I get back above this level right here, so improvement for tomorrow, right? Unless I got back above 29.0250, that short was good to go. It was a misread on my part. I could have simply scaled off half or 3/4 and left a quarter. And if we simply didn't close above 29.03, I could have been good to go for another 10 points to the downside. I didn't capture it. Totally cool. Gives me a way to improve for the following day, right? If you look at the low over here, you had to figure when we got the biggest push to the downside. Again, I'm looking for these speed bar shifts and to get underneath these fractals. And that speed bar shift actually didn't show up till way late. It showed up in the third bar over here. And I just don't like it when it's on the third shift. I want it to either be the first or second shift in a sequence. And we just didn't get there. We rolled lower than I thought we were going to, and we were about to push into New York lunch. London was closing, and I kind of felt like I would rather find a short from the upside than try to work the long from the downside. And there's a good reason for this. I would have actually ended up getting stopped on this trade had I taken it. It actually set up short over here. If you look, we pushed above, and we got speed bar shift down, and it would have been good for scalping to the low. But again, this is why you don't short the bottom of a rotation, and you do short the top. The other piece on this that was really important, guys, is remember when you're looking for larger extensions, we had a left shoulder over here, right? That was this right here where that yellow line is, that 29.07. We had a trap back into the wave, right? And then you'll notice we just simply never get back above 29.07 over here. And if you'll watch when we push over here, right, in the afternoon, see how when we came back up, they just never could reach that 29.07, and that's how you know you have a strong head and shoulders pattern. Now, do they ever bust? Sure they do. That's why you scale as you go along, and then you find ways to add back in. Could have I added back here during New York lunch? Sure. I don't like trading New York lunch, but if I wanted to, we got this massive push right here, right? Now you got to figure when you get a massive push, if you get another push on top of it, you would usually think, hey, a ton of people bought here, they're going to follow through. But instead of getting stronger pushes and bigger extensions, they just got smaller and smaller and smaller. See the divergence there? Until finally, right, you traded above your biggest wave, which should have forced those shorts to come in right here, right? Those are speed bar shifts. They should have been able to push and easily tag the 29.07. You get speed bar fractal, shift down, trap back into the last wave, and down it rolled. I should have taken that short. It was the middle of New York lunch. I don't feel bad about it. Now, there's one last piece I want to leave here. See when we were rolling down to the downside right here? I had a support zone based on my profile chart from what I believe it's 28.85. We can look really quick. $28.85 to $28.79 quarter, right? And I said I'd really like to find a long setup in the room based off of that, right? That's the zone. And I'm going, wow, giant push into the hole, right? I'm looking. Excuse me, I got this wrong. It's 79, not 70. Okay, it's right here. Well, that zone got completely annihilated, right? Not kind of annihilated, not a little annihilated. Annihilated. They blasted right through it. So a couple of things on this note. Number one, right? If you look at the top of that zone, they attempted to bounce right above. But we're not just trading the zone, we're trading the setup, right? And one of the requirements is we're getting these pushes down here, is that we get some kind of close back in. And all I simply said was, we're not triggering, right? We are not triggering what I need to trigger to get a long side trade. What I needed here, if you look, so the fractals play a key part in my decision-making process. And so not only did I need to get off of this level here, but I needed to close back into, with a shift up, into this level right here. And you'll notice, right, you'll notice as they're coming back in, that actually, so I stand corrected, they did shift up here, but you can see they just weren't coming in. It was right at 1 o'clock when the algos fired. And even if you had taken this long, which no one in the room did, actually I'm pretty sure no one in the room did, I know I didn't. Even if you had taken this long, right, in all fairness, which means you have to be comfortable trading end of the day, which I'm not entirely, right, that if you get this, then you get this right behind it, guys. Okay, this is speed bar shift, no fractal, right? This was speed bar fractal shift, not back into the wave. This is your second move, speed bar shift. This is your stop right here. So let me tell you what's cool. If you did take this trade right here at 28.90 for the push back in, it wasn't insane, even though I didn't take it. But your stop has to be 3 points below, right? And so 28, if you entered at 28, it would have been roughly at 28.8975, and your stop would have been a 28.8575. So it would have been about a 4-point. No, that doesn't sound right. Let's go do the math on this. Your entry would have been a 28.8975 for an 86 quarter stop. So it would have been a 3.5 point stop. That's a good stop, guys, especially when you're pulling off 6, 7, 10, 15 points on ES. If your risk is a 2-to-1 or a 3-to-1 RR, and you're using a 3-point stop, that works really good. As it was, that was right at the top of the hour. It's a horrible place to take a trade for a reversal. You really want to let them bury them in the hole. And when you look, when we finally did, as we cut all the way through there, the next target's 28.75. I just don't think we had enough energy to get there. My guess is we'll get there 28.57. My guess is we'll get there overnight. But if you look as we're pushing down, right, when you're getting these cascading waterfalls, I'm going to open this up here real quick. When you're getting this cascade, right, you've broken a swing low over here to the left. You're getting no positive delta, and the delta is getting progressively heavier and heavier to the downside. Yes, this can show that you're getting a potential bottom of your trade. But now I need the algo to kick in to trap back in. So I want it to close below this wave. And we really just did not get that close below the wave. And more importantly, I didn't get the shift back in. If this would have been followed up by a shift, the algo would have shifted it. Basically what I'm saying is, off the very low, the shift didn't occur. If it had happened like this series of bars right here, but they had occurred down here, I'd have been long on that. It didn't occur, didn't do anything, and it wasn't much of a bounce to begin with. I realized that it went 10 points, but you just smoked everyone from 29.32 to 28.72 at 60 points down off the high, and what you muster is about a 10-point bounce. That's pretty pitiful for ES. At the end of the day, there was not a lot of short covering in my opinion. It was simply the people who got trapped at the very end of the day on this move had to come in and cover, but no one else is freaking out who's short from up at these levels. So, to wrap it up, right, what our methodology did was give us great trade location with low risk. We got a great cover over here, at 28.98, right? Which was retracing back in off the biggest push off the low. It's a logical place to cover that trade. We could have looked for a re-entry over here at 29.02, still using our head and shoulders to the left because it hadn't formed our right shoulder yet. They were trying to use this as the right shoulder. It doesn't really matter whether they use this or they use this over here. They both work. The important part was you never got back over your left shoulder, and that's how you capture that bigger swing. I did not do a very good job of capturing that. But had it come at 1 o'clock, I think I would have. I'm just not going to trade over New York launch. Anyways, if you'd like to visit the room, my name is Simon. I'm a Trade and Perform coaching. Email me at tradeandperform@gmail.com. I'm happy to help you out. And I'm out of here, guys. My suggestion to anyone is don't blow up. Don't buy markets and free falls. Trade a process. Stay with it day over day. Okay, guys. Have a great afternoon. I'll see everyone in the morning.